All right, good morning, guys. Today is Tuesday, September 12th. As usual, be checking over analysis for US 30, gold, and EU. So real quick, right here, this is my daily biases because I see a US 30 trade coming in. My bias for US 30 is bullish, gold bearish, EU bearish, the dollar bullish. Here for US 30, it wasn't an official trade, it was just what was it? It was just a trade idea I'd sent this morning for US 30, and I think that was on the 30-minute right here. So we had a test and rejection of a triple SAR buy zone. So this zone is very critical, but unfortunately that trade got stopped out at break even. So you can see we still have a double SAR right here. So there's two ways you can take this trade. You can wait on the 15-minute time frame, in which case you would wait for this candle to close, and then you would wait for the next 30-minute time frame. Did I say 15 or 30? 30-minute, the next 30-minute candle, and then you'd want it to close above, and then you enter that. However, we do have a 15-minute entry that's based off of where all of these wicks are rejecting. So if we go down to the 15-minute time frame, you can see here we have a triple SCR right there. So here, this would be a, let me bring the requirements. Give me a second, guys. Let me see something. Okay, we have 3 more minutes. So you see, here we have a break. This candle was the break, and this one is a continuation right there. So wait, I have to see this. Yep. So this is the trade right here. So I want this 15-minute candle to come back a bit below. Because these are the two candles, right? So those are the two candles. And this is the zone we are trading. Now, right, this is a break and continuation entry because the zone was above price. So break and continuation. So this is the trade I'll wait for in the next 2 minutes. I don't want it to go too far up because this is the zone we are trading. So I want my stop loss to be well below here. As we wait for that, gold, nothing really. Unfortunately, I'd sent out this, again, it was a trade idea, not an official trade. But this one, you can see we had a quintuple, so 5 sell SARs here. So I'd sent this one out. I hopped into it as well, but I got stopped out at break even. But that sucked. But we don't have anything for gold currently on the 15-minute or 30-minute as well. But for gold, I know we are waiting for that trade in about 2 minutes. Gold, their next trade would be on the 4-hour time frame. So you guys can see here, there's a break of the double SAR on the 4-hour. Then you have this continuation. So you would need this 4-hour candle to close below this double SARs, and then you'd go ahead and sell gold at that point. But that would happen at, we have 1.5 more minutes. So this one you'd have to wait for 3 hours. So that's until like 1 p.m. So that's a trade you can have on gold later on. EU, as we wait for that gold trade. This is I mean this EU trade I'd entered earlier because it was a break and continuation of a double sell SAR. So I was in that EU and I'm still in it. So let's see how this US 30 trade will close. Let me delete this for gold because that already happened. All right, US 30, I want it to come down the way it's coming down. I'll enter this trade with a 0.75% risk. So I think I'm ready to go. 30 seconds. So I needed to, I don't want it going too far up. If it goes too far up, I'll wait for the trade down here. Uh, 10 seconds. I don't like how it's moving up. All right, I'll do this. I'll enter with a 0.35% at first. If the trade comes back down, so I'm in it with a 0.35. So I'm in it with a 0.35. If it comes back down, I'll add the other 0.35%. So if it comes back down, I'll enter in with the other remaining percentage. And I know the stop loss is well below this zone, but just the height of it or the distance of it, that's why I chose to hold off on entering the full 0.75%. See, was it even 0.75? What's half of 0.75? Let's see. 0.375. That's what I'm in. The risk I'm in right now. Go ahead and delete some of this others right here. So my next position, if it comes back down, I'll wait right here. And then somewhere down here. And then I would go down to the 1 minute. So this is what I was talking about, right? You should always ask yourself, how far is your entry relative to the SARs you're trading? If you feel like the entry is a bit too far, right, you have 3 decisions to make. You can either take the risk and enter with full margin or full the risk you're taking, or you wait for retracement down here in order to take the full percentage you're planning on taking, or you do what I just did. I entered using half of what I would enter. And then if it goes into profit, I would and hits TP, I would be up. I would actually be up 0.75% instead of missing out on a trade. The worst thing to waiting, sometimes the trade can just shoot up to full TP and then you end up not having anything. So for me, I think entering at first with half, if the entry zone is a bit far from the SARs, that's a bit safer because worst case, if the trade hits stop loss, you just lose a little bit. Best case, if the trade hits full TP, even though you wouldn't secure what you would have secured by going with the full risk you're meant to go with, you still at least secure some percentage. So let's see. So it's going down this way. I'll remove these lines, this double SARs. so that we reduce the clutter on the charts for now, because now I want to go to the 1 minute and I want to observe a live SAR. So either 5 minute or 1 minute, and I want to observe a live SAR. So this is the trade that I'm in with the 0.375. So right now, if we get a closure, two candles closing above a live SAR, then I can add my other 0.375% because it's going to show that these zones are holding. So both of these zones, so here is the zone that we traded off of against. And also here I can see we have a we have a fair value gap right there. Give me a second. Give me a second, guys. I'll be right back. Okay. So here on the 5 minute or on the 1 minute. So we need, right? So this is the current live SAR, and you guys can see that fair value gap right here on the 5 minute. So let's see what's going on the 1 minute and see if we can get an entry. Now here, we need what happened here. So we need a live SAR, and then we need 2 1 minute candles closing above. So we'll see if we get that. If we get that confirmation on the 1 minute, I will enter with the remaining 0.375%. Anyway, let's see what's going on with these other instruments. Also, if you guys can see, I changed the, what is it? I changed the indicator I'm using for the, I know all the indicators have the SAR built in. The reason I am now using the reversal indicator as opposed to the trend indicator, I'm more interested. You see this, I mean, I don't trade off of signals, but just back testing, when I showed you guys how I back tested US30 on the daily time frame using the reversal indicator, you can see how some of these entries are pretty nice, right? So I just chose to use the reversal indicator for the SARs. And then what I'm doing, so for example, right here, since I am bullish on US30, I would come here on the 15-minute or whatever time frame I'm trading. And then if I'm bullish on US30, I just turn on the buys only, and then turn off the sells. And then I just leave this as 0, even though it's the 5-minute or 15-minute, I just leave this as 0 for everything, 50 for everything, 9 for everything, and close for everything. So all right. Okay. I know. So we need a live SAR on the 1 minute to form, and then 2 1-minute candles to close above that live SAR, and I'll jump into the other remaining 0.375% that I have. Right. Jeez. All right, so the more this candle goes up, I don't like being on the 1 minute time frame, but the more this candle goes up, I can tell whether there'll be like a 1 minute SAR. So we'll just wait for this to prop up a little bit, and then we'll go down to the 1 minute and confirm that that single SAR has been created. All right. This. Okay. So no news today. So we know this is a 15-minute zone. We know this is a 30-minute zone. For this 30-minute zone to validate, it has to be 10:30 a.m. Eastern Standard Time. So ideally like 35 minutes from now. So this is a 15-minute zone. This is a 30-minute zone. So 15-minute zone already validated. 30-minute zone has not yet validated. Here we are waiting for a live SAR on the 1 minute time frame. So it's not yet there. I know we did get that buy. I don't trade with signals, but I just, so even here, if you see, I don't change the values in here for this reversal. So like if we go on gold as well, you guys will see, you see like this sell right here is still 50. So since I'm looking for sales, I turn off the buys. So I just use it. I'm just trying to incorporate some other confluences as I'm trading the SAR. But I need that live SAR because I'm trading the live SAR. I'm not trading the reversal indicator. So this is just like a little confluence right there. Okay, so there it is. So we need, so for me to scale in on the remaining 0.375%, I need 2 1-minute candles to close. So I need a 1-minute candle to close above here. I need the second 1-minute candle to close above here. And then I'll scale in, I'll add my remaining position because I see this as a fake out that they, right, we got filled in and then they try to bring price all the way back down, and then they're propping up price. So I like how price is rejecting from our 15-minute zone that's down here. And also it's rejecting from this 30-minute zone that's up here. So for me to add my position, I need 2 1-minute candles to close above here. And then I'll add the remaining 0.375%. and that should bring the trade risk, the total trade risk, to 0.75%. So just gonna keep waiting. And you guys can see, so sometimes what I'll also do, instead of entering in on impulse like right there, I might hold and then wait for like a near retest of this zone and then enter on impulse. But that's when I'm trading like by myself. So of course I don't like trading on impulse when I'm trading with you guys. But sometimes if the entry zone is a bit far from the SARs I'm trading, I'll just hold on and then expect like some sort of retracement. And if price gets around the zone, but one thing, the trade always has to be valid. So even for me, when I'm trading on impulse, the trade always has to be valid. So sometimes what I'll do, if the entry is a bit far from what I'm trading, I'll wait for price to come close to that zone, and then I'll just go ahead and hit buy or hit sell depending on the direction that I'm trading. So let's see if we can get that scaling. So we need, or I need, 2 1-minute candles to close above here. And then I'll add the remaining 0.375% of the trade. Yeah, so gold, there's nothing on the, unfortunately, nothing on the 15. So nowadays, right, I still trade the most of my entries are on the 4-hour and 1-hour. However, like during the live session, like this entry right here for EU that I'm in, this was a 1-hour entry. So most of my entries are still on the 4-hour and 1-hour. But if I'm trading on the live session, most of the times, or some of the times, we don't have any 4-hour and 1-hour entries. Like either they'll be on their way to TP, or I'll have been stopped out. Wait, give me a second. Or I'll have been stopped out. So what I do for you guys for the live session is that I analyze, or I look for trades on the 15-minute time frame and 30-minute time frames, and that's what we would be trading. So for example, right now, this trade, for those of you who might just be joining, and looks like I forgot to go live on YouTube today. That's fine. This trade is on the 15-minute time frame. So we already entered with a 3.75% risk because of the distance between the entry and the SARs. So we are waiting for 2 1-minute candles to close above this live SAR, and then I'll jump in with the remaining 0.375% to bring the total risk per trade to 0.75%. So I let you guys know that I increased my risk per trade. Nowadays, I'm risking 0.75% per trade. I know I used to risk 0.5%. So as you get better and more confident with your entries, you can go ahead and up the risk. But I don't recommend anybody to risk anything more than 1.5% per trade. So I'm actually working my way up to risking 1% per trade in the next few months. So nothing on EU, nothing on gold, unfortunately. Yeah. So be on the lookout too, like for those 5 or quintuple. So sometimes you'll have double. So you can have double SARs, you can have triple, you can have quadruple, you can have quadruple. So this right here, the trade idea I sent yesterday, this were 5 SARs. So you have 1, 2, 3, 4, 5. So you had, which was that candle? You had this one. So you had this candle breaking. So you need, if you're trading all of them, you need all of them to be broken. So you could have chosen either to trade 2. So at least, so remember, you always either have to trade double, at the very least double SAR. So you can choose to focus on double. You could have chosen to focus on triple, quadruple, or quintuple. So for me, I chose to focus on all 4 of them. So here, yesterday, when this candle closed above, this next candle opened and broke all the way below. And then, so that's the break. And then this is the continuation, right? So the entry was right there, 30 pips stop loss. Stop loss was all the way above here. And unfortunately, that's the trade that for me, I got stopped out at break even during Asia session. And from then on, gold just decided to melt. But right now, we don't have any entry on gold. US 30, I'm still looking at it on my MT4. So still waiting for 2 1-minute candles to close above the live SAR. So nothing as yet on the 5-minute as well. So this is just a matter of patience. And even though I entered in with half the risk, so half of 0.75%, if stop loss hits, I'm just going to let it hit. So I'm not going to extend it because I just went in for double that. So I'll just let it hit. And then if it does hit, I'm still going to observe this zone. So keep in mind, we have entries on the entry we just took is on the 15-minute. Right here, we have double SARs. So if I re-extend them, actually it's triples. So it's triple SARs right there. We have double SARs on the 30-minute right here. So if I get stopped out on this, at least I didn't lose the whole 0.75%. So I can either wait for another entry on the 15-minute or wait for this entry on the 30-minute. So what I can see here, so you can see this 30-minute validated. So it closed above. So that was the break of this double SAR on the 30-minute. So if you're trading a break and continuation, you need both candles to close above. So what I can see possibly happening here, if we don't get faked out of this trade, I do see this 30-minute, if US 30 is to go bullish, I do see this 30-minute candle reversing and closing all the way above here. So if that does happen, so whether I get faked out or let's say we don't get filled in until then and we're still in the trade, that would be the entry for the 30-minute. If this 30-minute candle closes above this double SARs right there. So this zone right here, 34,606 zone is a zone to be on the lookout for. If two 30-minute candles close above 34,606 area, that would be a buy on the 30-minute. So this last one needs to hold. Let's see. And the other one I can actually see, this was also a, oh, actually, wait, my bad. Yeah, that's the one we traded, test and rejection. All right, let me know if you guys have any questions, because right now we're just more on a waiting or holding pattern. So even due to this drop, I don't even see, if we go to the 1 minute, we won't have that closure. Let me go ahead and Again, I don't like extending SARs on the 5-minute and 1-minute because it's just too messy. So 1-minute, we need a live SAR to be formed for a buy, and we need 2 1-minute candles to close below. So right here, there's that. If you guys saw, there's that last 15-minute buy SAR that's holding price up. So hopefully we don't get that broken. If this trade hits stop loss again, it's only 3.75 or 0.375%. So that's only like 750 on a 200K account, which is what I'm using. So it's not a big deal for me. But I'm hoping we don't get that, because here I can definitely see us getting faked out. No, definitely. I can see probability of us getting faked out and then the 30-minute validating. So I'm hoping we do not, and then I'm hoping we start going back to the upside anytime from now. I think it's huge. $15, that would be 0.5. Nope, not yet. All right, I need a live SAR right here on the 1-minute. So you can see the zone again, right? This is that 15-minute zone. So you can see there's still, or it's still holding. So this is the 15-minute buy SAR or double buy SAR zone. This is the 30-minute double buy SAR zone. So the 15-minute has definitely been holding. So this is good right there. So there goes that live 1-minute SAR. So I need 2 1-minute candles to close above here, and then I'll add the remaining half of the trade. When I first started to learn, let me know if let me see. When I first started trading US30, the first person that I used to follow, so I used to check trade set or trade sentiment right here. So for example, this one right here shows you like how high or low US30 is. So, you know, after the opening bell. and then he would look at how many clients are either short or long in the market. So one of his confluences was, I'm still observing that. One of his confluences was, if this number is, what was it? Maybe 70, and Audrey, I know Audrey still uses it, like 70%. So let's say 70% of clients are short in the market. So this would reflect retail traders. So we know that a bunch of retail traders are not really good at trading. So if this number here was like 70%, 80%, and it was short, he would like be looking for longs in the market, because the idea is that market makers would ideally try to stop hunt all those people that are short or long in the market, and then ideally they would go opposite of what they are doing. So that's just another, I don't want to be looking at too many things, but if this is helpful to anybody. So this, and the other thing here, he would also look for how many points US 30 is positive or negative. So his threshold was, I think, about 100 points. So if US 30 was like 100 points in the negative, for example, let's assume here US 30 was at least 100 points in the negative, and then a lot of clients were trying to buy, that would be like a double confluence for him to go short, because it would show that the market is bearish, and then you'd have like a bunch of retail traders trying to buy. So let's say this was like at 200 and 80% or 90% were trying to buy, he would start looking for shorts. So that's just something I learned as a beginner. We need those 2 1-minute candle. And when we do get that, and also closure above this 30-minute zone, let's see, we have 15 more minutes before this candle closes, this 30-minute candle. So you see what I told you guys? This is a 30-minute entry. So break right here. If you're following this, this would be, if this validates, if this 30-minute candle closes above, that would be a continuation. So I do see possibility of them in the next 13 minutes reversing this 30-minute candle all the way up and closing it, because here we have a double SAR on the 30-minute right here. So I do see that possibility right there for them reversing this 30-minute candle. I'm just hoping we don't get stopped out and then they reverse this candle all the way up. Because I literally hate that feeling, but we'll see how that goes. But you can see how the 15-minute is holding. The other thing I normally mention to you guys, look at the wicks. So the wicks will normally tell you a story. So you can see how all these wicks are rejecting from the downside. So what this tells you is that we have a bunch of buyers in the market that are holding price here. So since we're in a buy and we're looking for buyers, we need these buyers to keep holding price for us above our stop loss, and then push price up above. So I think if they can push price above and bring it above this 30-minute zone right here, that should be a nice confluence to pump up price. So always look at wicks, because wicks will always tell you a story. I know I haven't used the markups in a minute. Okay, look at that. So I know we haven't used or for me, I haven't used the order blocks in a minute. You can see we have a 4-hour bullish high order block right there. And if I turn on the zones indicator right here, I would want to see buyers. So there you go. So you can see we have a bunch of buyers that are sitting here. We also have a 4-hour bullish order block right there. So if we have buyers here, we always ask ourselves, what order block can they use to push price up? So even though I don't trade using order blocks anymore, because I've been focusing on the SAR, you can see, right, even for this entry, I didn't use any order block, but I just used the SAR strategy even without looking at the markups indicator, and you can see they still line up. So you don't have to use all the indicators at once, because I told you guys when I started using the SAR and I was trying to tie it to order blocks, I was trying to tie it to the zones indicator, I noticed that I was getting like analysis paralysis and I was actually losing a lot. So just focus on one and then see, backtest it a lot and see what works for you, and then just use the one. If you want, you can start bringing in the other indicators or strategies as an additional confluence. So you can see how they're pumping this up. So we have 11 more minutes to go. So this, if this closes above here, if this 30-minute candle closes above the 34,606 zone I told you guys, that now would also be a buy entry, an SAR break and continuation for the 30-minute time frame. Now, the one we are in right now is a test and rejection on the 15-minute. So again, remember, down here is the 15-minute, up here is the 30-minute zone. So if this 30-minute closes above here, that would be a break and continuation entry for break and continuation buy entry for US 30. But you would need this 30-minute candle to close above. And you guys can see it's doing what I anticipated, right? Because I told you guys, hopefully we don't get faked out. So it didn't happen. So I mean, we can still get faked out, but fingers crossed, the buyers that we've seen keep pushing price up. And then from then on, wait, now maybe on the 1 minute we have, okay. So this is that live SAR right there. We need 2 1-minute candles to close above here. So I can extend this just a little bit for you guys to see. So it's only extended for 5 candles. Let me extend it for 10 candles right there. Okay, so we need 2 1-minute candles to close above here. And then I did mention to you guys that every end of the week I'll be doing recaps for the trades that I've been taking. So I started off, I did that this previous week. So if you guys go to my YouTube channel, if you come down here, actually, didn't I? Huh. Interesting. I didn't put it in there. I'll put it. But if you go to YouTube, you'll see that I did you'll see that I did it this one. So I'll be doing it like at the end of every week. So one thing I noticed when I was recapping these trades, because of the SAR limitation to have a max extension of 500 candles, I wasn't able to get back to like the first trade. So like what I did yesterday after the win, I got yesterday from US 30. At the end of the day, I actually recorded the video yesterday. So what I'll be doing, whether we take a win or a loss, in that given day, at the end of that given day, I'll be recording the video. And then at the end of the week, I'll just merge all of those videos together. And then I'll just create one YouTube video for it at the end of the week. And then you guys can review that. So in these videos, like for example, in these videos, in this particular video, I touched on all of the strategies, and then I touched on the break and continuation entry. I touched on the test and rejection entry. So that's why this video was a bit long, like an hour and a half. So I don't want them to be too long. I want them to be like 30 or 45 minutes. So the only reason this one in particular was long was because of I touched a bit too much on it, or a bit on other strategies. So buyers and sellers are out here still fighting. All right. We don't have anything else. So EU, I don't know if anybody hopped in. So I know it's not an official trade. So this is another trade I'm in right here, EU. So I jumped in this EU trade. It was a break and continuation in the direction of daily bias. I'm still in that EU trade. The only other thing that I personally, I don't like, if I'm in a buy for US 30 and I'm in a sell for EU, I don't like that because normally these 3 instruments move alike. So I normally don't like being in opposite trades for either. Now they don't move alike every time, but a good amount of the times they move similar to each other. So that's another thing I'm in a sell on EU and I'm in a buy for US 30. That's another thing I do not like. But anyway, so long as the trade is valid, that's the only thing that matters. So hoping we get that push, nice push up. The 30-minute candle. So let's see what's going on the 30-minute candle. This 30-minute candle needs to close above this zone. So in the last 6 minutes, we need this bias to push price up heavily and close up here. So gold, there's nothing on the 15, nothing on the 30. EU, I'm already in that EU trade. Yeah, today's just one of those days where I was hoping this trade would go up into profit almost instantly, but
The day before heavy news.
oh yeah, you know what? That makes sense because tomorrow is CPI. Yeah. Tomorrow is CPI. That makes sense. Yeah, because the day before heavy news, they try to trap people in one direction or trap both buyers and sellers or fake both of them out. Which reminds me, now that Audrey, on my account, I just got stopped out, I guess, because of slippage. So I'm just down 0.375 for the day. I was out at break even. So let's see if this one, but for me, due to slippage, I got stopped out. Now that Audrey reminded me about news tomorrow. So tomorrow for you guys, same thing to what was the previous news we had, NFP. So during heavy news events like NFP, CPI, check the crosses indicator and see what signal. And I know Audrey and I were talking about this yesterday. I almost always forget to tell you guys about it. But for the crosses indicator, so let's assume CPI is about to happen like right now. So what I would do and what I did during NFP last time, I looked for an entry. So let's say so right now US 30, the last signal on US 30 is a sell on the crosses indicator. And again, this is on the 15-minute time frame. So let's assume I saw a US 30 entry on the 15-minute time frame for SARs. And let's assume I was looking for sales on US 30 and I'd seen a double sell SAR and I can see it validated. So what I normally do, I normally come in and see what was the last signal before news is about to occur. So let's say news is at 8:30. So I'd come in here like at around 8:15 and see what was the last buy or sell signal. Now, if that aligns to like a trade I'm looking at in the direction of SAR, that would give me a lot of confluences. Because what I've noticed is that during those heavy news events like CPI, especially CPI and NFP, a good amount of times price has gone in the direction of the most recent crosses signal. So whether it's a golden cross, whether it's a secondary cross, price in a good amount of them has gone in that direction. So unfortunately for me, maybe I was a victim or I'll be a victim of being faked out. I got, slippage is just annoying. I got stopped out because of slippage, but this markup is still running. So I don't know if anybody was still in it. But for me, I'm still looking at this 1 minute time frame. So if I get that 1 minute entry, I'll go in with the remaining 0.375% still, and I'll just write that. Yeah, but anyway, so that's what I've noticed. I normally forget to let you guys know every time, but that's just something to consider. Let me see. When was the last NFP? What was it? Last month was August. See what day it was. Or I can just go here. I know US 30 is coming back up. Let me see if I can replicate what I did last time. I don't know when NFP was. I think it was August. Should be the first week of August, right? Friday, August 4th. Okay, Friday, August 4th. And I traded gold. So for gold, Friday, August 4th, and I remember it was a buy. And by then I was still, my daily bias on gold was bullish. Friday, August 4th. Nope, change line. Wednesday, Friday, right here. Friday, August 4th. So this was it right here. So you guys can see this August 4th on Friday. So NFP was normally what at 8:30. Yeah, so this 8:30 candle right here. So when this 8:30, if we replay this, so you can see the previous signal before NFP was for a sell. And when the NFP candle started, it started off bearish, heavily bearish, and then shot all the way up. So that's what I mean by looking at what the previous signal on the crosses was before NFP. I don't know what is there for US 30. US 30 is pumping back up. That's so annoying. I hate being faked out. Friday, August 4th. Right here somewhere. So that was it for NFP. Friday, August 4th. So that's the 8:30 candle. Opened up bullish, sank a little bit, but that sink was 223. So that sink was actually 80 pip, an 80 pip drop. But I wouldn't just because it says a sell, I wouldn't just automatically enter the sell like right before news. So I'd have to have other confluences. So I'd have to have like a double SAR somewhere. Is this a live SAR? Give me one. This is a live SAR on the 1 minute, right? This one down here. Yeah, there's one right there. Give me 1 second. So if this 1 minute candle closes above there, I'll re-enter this trade with the remaining 0.375% that I was telling you guys about in 30 seconds. So 50 pips stop loss, 100 pips TP. So that's the 1 minute entry we've been waiting on. What time is it? Let's see how the 30, give me 1 second. See how the 30-minute candle closed. So unfortunately, they didn't close it below. So now this one, the 30-minute zone is still valid, but for you to now enter this as a 30-minute entry, this would be a break and continuation. But anyway, I'm entering that trade right now with a 0.75% risk based off of the 1 minute. Because again, right, this first one did not get, I got stopped up, but for me, it was due to slippage. But hopefully you guys were not stopped out, depending on the broker you're using. But I entered the remaining 0.375%. So best case scenario, I win this trade. And then if I win this trade, if you think about it, if I win this trade, I'm still risking 0.375%. If I win this trade, what is it? I will be up 0.375%. So I'll get back my loss that I made, because if I win this trade, I'll make 0.75% on this trade. So that will give me back my loss, ideally due to being faked out. And then I would still be up for the day. So let's see how this goes. I'm hoping it hits TP real quick. Okay, so let's go back to that 30-minute time frame. So for you to now enter this, so let me re-extend the lines here for you guys. On the 30-minute, so as to show you those double entries. Now, this first trade, right, based off of, or let me show you guys something. So we entered, let me first cover the entry, the first trade that we are in, or some of you might still be in because I got slipped out of it. This one, right, tests. So hopefully you guys can see it. This one right here, this is a 15-minute zone. It has a triple SAR, triple by SAR. And if I bring this one, let me bring this one closer. So trade requirements and trade entries. Now, so you have two types of entries: break and continuation, test and rejection. So this is always dependent upon where your zone is relative to price. So in this instance, price was above, the zone was below. So this, if you get any sort of entry here, it would be a test and rejection. For this zone to give you a break and continuation, price has to first come below here and attempt to go back up. And I'll cover that on the 30-minute entry. So this one, hopefully you guys can see it. You have this, and I went over that on the weekly recap. You have this candle, your first candle, it tested the zone, did not close below it. If it closed below it, trade is invalid. Then you have the next candle rejected off of it. So, and that was the entry. So that was the rejection candle. Now, this one, the rejection candle or the continuation candle does not necessarily have to come back and test the zone or reject off of the zone. Because ideally, remember, you just need those two candles. After the first candle has validated, you need the next candle to close above. Now, if it tests or retests the zone, well and good. That's normally the ideal situation, but trading is not always ideal. So you then have to make a decision. Do you enter on the confirmation? Now, like for example, this entry we took, yes, the trade was confirmed, but then you ask yourself, okay, if the trade has been validated, how far is my stop loss from the SARs that I'm trading? So in this instance, you can see that for us, the distance between the entry and the SARs was about 70% or 80% of our stop loss. And you guys know that I don't like messing with that. So, which is why I said you normally have three decisions to make. You can take the risk and enter with the normal risk you take. So for us, we were risking 0.75%, but I told you guys, because of due to the distance, I wasn't feeling comfortable going in initially with the full 0.75%. So what's the next best thing you can do? The next best thing you can do, split your risk. If you're going in with a 0.5%, maybe start off with a 0.25. And if the trade comes back down, in which case like this one did, find an entry on the 1 minute and 5 minute, and then go in with the other half. So which is what we did on this. Unfortunately for me, due to slippage, I got stopped out of the first 0.375% trade. But you guys can see we waited on the 1 minute, and the 1 minute gave us that validation. Now, what's the third option you can do? The third option, which I don't normally do on the live session, is if the distance, for example, was that 70%, I would not enter with half the lot size. I would not enter with the full risk, but I would wait for a sort of retracement back down to the SARs. And then if, for example, the trade comes and touches around those SARs, I would jump in on an impulse entry. Again, I try not to do that because if you start breaking your rules, even the smallest rule, that can scale up and you can start messing up on a larger scale. Now, the other thing you can do is not to enter with the full risk right there, not to enter with the half risk right there, and then you wait for price to retrace back down or back up, depending on the direction you're trading, to the SARs you're trading, and then you wait for entry on the 1 minute or the 5 minutes. So for example, a good example for that would be this 1 minute entry that we got right here. So if I'd sticked out and did not enter with the 0.75% and did not enter with the 3.75% up here, this trade now, I would have entered with a point, still entered with a 0.75%. Now, between the 1 minute and 5 minute, the 5 minute is better as a confluence compared to the 1 minute, because remember, the lower the time frame you go, the more disrespected your confluences become. So the 5 minute is a better source of confluence than the 1 minute, but you always have to judge and see which one can give you that earlier entry and that optimal entry. But anyway, that was the 15-minute entry that we were in, or some of you might still be in. Now, this 30-minute entry, you had a break candle right here. Now, for you to enter, you would have expected this 30-minute candle to close above. Now, if this 30-minute candle had closed above this zone, that would have been a break and continuation entry. And this is the importance of always waiting for those two candle closures, because if you entered on impulse after the break candle, you would have still been in drawdown, just like me right now. You would have still been in drawdown. So right now, since price closed below those double SARs and price is still, or the trade is still valid, that brings you back to square one. So you'd now wait for a break candle. So you'd want a 30-minute candle to break and close above here, and then you'd want a continuation candle to close above here. And at that point, you would now enter your buy based off of a break and continuation entry. So hopefully that makes sense for y'all. EU is just acting up. Gold has done so. I was looking at gold earlier for a possible reversal right here, but I don't think it met the threshold because this is the area of interest somewhere around 1920.5. Threshold would have been 150 pip move, so somewhere around 1905.70. Yeah, so I thought that gold could have given a reversal. I mean, you know, this buys definitely went up, but again, you want to make sure that you're only taking buys. If you're using the reversal strategy, you're only taking buys or sells after the threshold has been met. So I'm still liking this wicks we have right here, unless we have just a bunch of sell volume out of nowhere and just drops down. So if US30 does break this, US30 might go a bit lower. But keep in mind, right, for me, I'm still expecting US30 to go up to create, to break the all-time high and create a new all-time high and the yearly high. So I'm still expecting, so as much as I'm trading in the direction of daily bias of my daily bias right here, based off of historical standards or historical data, I'm still expecting US30 to pump up and create a new all-time high and create the yearly high. So that's what I'm still expecting. Okay. Oh, and there it goes. It's pumping back up. You know, because I normally change the color of my candles. Sometimes I can't tell. Let me reduce this lines again. So you guys can see this is that entry we had right there. And I like how we're even forming this bias down here. So just need that nice push up. Yeah, but you guys can ask questions if you have any. This has been one of the longest sessions we've had in a while.
How are you?
Hey, what's up, Desire? What's up?
Yeah, I'm fine, bro. Yeah,
Man, the market hasn't been wanting me to win. I've just been gotten taken out at break. Like yesterday, I was 15 minutes in 1500 in profit for this gold sell on the 15-minute. Asia came and took me out at break even. US 30, I was in profit this morning on the buy for $1,500. Got taken out at break even. It's been a crazy week.
yeah, the same, bro. Like last week, I had like 4, 5 break even. It's very frustrating. But I saw that like when I was back testing, even when I was like I back tested a lot EU.
Mhm.
For example, using the double SR to enter a trade,
Mhm.
on 1 hour time frame, I saw that like maybe on 1 month I can have like between 7 or 10 trades, but in these trades I could have like 3, 4 break even.
Yep.
Yeah, so there is a lot of break even. I was thinking about maybe, yeah, I will back test again. Maybe it depends. Sometimes it depends on it depends where you put your stop loss.
Yeah.
Yeah.
I mean, yeah, some of the things I've thought about is to reduce my stop loss, but especially for US 30, there are times, and even gold yesterday, I could have gotten away with a 10 pip stop loss, but I don't want to, I'm not yet there as a trader to do like a 10 pip stop or something, because with a 10 pip stop, when it works out, you can have an amazing risk to reward. I think there's one I'd back tested. If you guys watched the weekly recap of last week, there's I think a US 30. Yeah, US 30. Literally, you would have gotten away with a 9 pip stop and had like a 1:10 or 1:20. But those trades come like very, very rarely. So the question is, how many trades are you gonna blow before you get to that 1:20 trade?
Yeah, that's the problem. Also, like using a 10 pip stop loss on indices or commodities. The problem is that you can't you most of the time you can't use this stop loss on 1 hour time frame.
Yep.
You need you need to go like this can be used. I used to do that with DAX. Like I used to trade with 5 pip stop loss, 10 pip stop loss, but it was in 1 minute.
Yeah, I feel you.
Yeah, you can do that in the lower time frame, but for EU, I think EU you can do like a 10 pip stop loss or even 15 stop loss in 1 hour because EU move differently. That you can do it, but with commodities and this kind of difficult.
Yeah, because even
But
in this EU trade, I mean, I have like a 30 pip stop loss. But I can technically get away with putting my stop loss above this double SARs that I'm trading, and that will give me a 10 pip stop, but I don't, it's like, it is what it is. Yeah.
yeah. So what I was thinking, like, using this strategy, as we don't get a lot of trades, trading in 1 hour, maybe it's good to have multiple assets that you trade.
Yep. Either that or like for me, And this was inspired by you looking for entries on the 15 and 30, but those ones are also tricky as well.
Yeah. I do it, but not often because yeah.
But
1
EU would have
hour.
been nice right here on the 30-minute, because I was looking back, but I was asleep. Like this was midnight. This was a 30-minute double SAR. This would have been nicely into profit. This is another 30-minute double SAR, triple SAR. 15-minute as well. When I go to EU on the 15-minute, there's just too many SARs, so I don't even do that. But here there was a double and even triple SAR on the 15-minute right here, and you could have ridden price below here.
So you went heavy on that US trade gold.
What,
Oh,
US 30?
Yeah.
No, this one I'm in with I was in with a 0.375 for this one. I didn't go in with the full 0.75 because the entry was just too high. So unfortunately I got slipped out. So this one I'm in with the remaining half. So if this one hits stop loss as well, for me, I'll be just down 0.75 for the day, which is not bad. Yeah. Yeah, but nowadays I'm doing 0.75, but because you can see here, even with the win that was there yesterday, as much as we were down like 0.4%, with that 1.5% win right now, just up 1% for the day. So man, it's crazy. Yeah, this one right here, September. So you see, yeah, I like the 0.75% risk, because if you win, that's a nice 1.5. But the issue, with trading, it always comes down to that patience. Are you patient enough to wait for that trade to validate, especially how you're talking about the 1 hour and 4 hour, which is like for me what I use to enter trades. Right? Are you patient enough?
Do you know that guy, the Japanese who made like 150 million
Yeah, I saw
with
that story.
in 3 or 5 I think it was 3-5 years, starting with a 15K account, his personal account. And
Yep.
I saw one of his interview. He was saying that how he made that is because he was looking like almost for the perfect setup. Like he was waiting, respecting his trading plan 100%. 100%, yeah. So he wasn't taking a lot of trades, but when he was going in this trade, he was going heavy because like everything was on point.
Yep. And that's what I've noticed. Yeah, you're right. I read his story or watched his story on YouTube. And that's what even for me, I was thinking to myself the other day, like, and I mean, I've definitely improved over the last years and months. I was thinking to myself, like, what would happen if I literally followed all my rules and only traded when a trade was valid? And if you think about that, like, you would be, because a lot of people, or a good amount of people, they'll find themselves not being profitable, but they're not being profitable because they don't know how to trade. They know how to trade, but they trade when they're not supposed to trade. Right?
Yeah, that's the story. That's the story of my life.
Yeah, because even I think like one of the greatest traders ever in the world, this guy was losing like 8 out of 10 trades. But because he was using a nice risk to reward and a nice strategy, when he was sure about a trade, as you say, like the Japanese guy, he used to go in heavy. So as much as he used to lose like 8 out of 10 trades, and I forget his name, and this was like in the 50s or something, as much as he used to lose like 8 out of 10, those 2 trades that he would win, like they were so heavily in profit, because he would enter into a trade like in February and then cash out in December or something.
Yeah. I saw that guy also, that interview.
Yeah, it's always like, yeah, because when I thought of it the other day, it's like, the trades that I like, even the loss that I took yesterday, it's literally because I traded after, like literally 5 minutes after New York open. And then I was like, if I had waited and followed my rules, like that loss wouldn't have been there. So it's not like I don't know how to trade. It's more like, okay, hey, you still, or I still need to focus on my trading psychology. I still need to literally, so and that's why I was making fun in the group yesterday. It's like, hey, I'm trying to find ways that, I mean, it's not an issue for me, but no matter how good of a trader you are, sometimes you'll still deal with FOMO, you'll deal with always
Yeah.
wanting to trade. So yeah. All right, guys. Unless you guys have any other questions, the market is dead, man. And this is the 1 minute time frame. I'm hoping this pushes up. So hopefully you guys who were in the original trade didn't get stopped out. For me, I got stopped out due to slippage, literally during this candle right here. But
The market sucked today, but to be honest, my psychology needs work because I took myself out of a winning gold trade. I was in that buy early and I took myself out.
yeah, like this. But this week, and the other thing I noticed too, the other thing I've noticed, so the summer months don't have a lot of liquidity, right? And this is literally the first week after the months of summer. So what I noticed, was it last week? Yeah, even this week, it's like after the summer is over, which is when those hedge funds are back in the market and institutions, they do a lot of fake out in the first week of September. And this one I'll definitely journal. So it's like, I think for next year, if I'm still trading, hopefully I'm still trading, or hopefully I'm still here, it's like after summer, during the first week of September, is to be cautious of trades. Like even though a trade is valid, like maybe use half risk or just stay out of the market for the first week of September. Because I think this week is definitely a good week for trading. This week, like looking at all these trades, looking at this gold trade that even though I was taken out at break even, but the issue last week, I was getting stopped out heavily, but then the trade would come. Like if you guys remember last week, gold was literally just zigzagging. Gold was just doing this. So it was faking out everybody. So it's like next year, I just have to remember the first week of September, you just gotta maybe stay out of the market and go find something else to do and then come back the second week. But yeah, it's all about learning. And as you said, Livy, that's psychology. Like, dude, even for me right now, I'm still bad because thinking like, okay, I left 1,500 on the table yesterday on gold. I left 1,500 on the table today on US 30. And it's not really leaving it on the table. It's just that, okay, I have my rules that if I'm if I have a 1:1, I set break even. And the good thing is, like, I love the break even thing, because if I did not set break even on that US 30 trade that I'd taken this morning, I would have been down 0.75%. So right now, as much as I got slipped out and I'm down 0.75%, I'm like, okay, I would have been down 1.5%. So it's like, okay, I'm also thanking myself. I'm like, hey, you still followed your rules because it could have been worse. So hopefully both of these trades hit TP, and then this would be, as much as for me, craziness happened and got slipped out. But I also noticed, I know there's that whole issue that came up with MFF about people being slipped out. But I did notice, like yesterday, even for that US 30 trade that won, like my candles were different. My candles on FTMO were different. My candles on some other prop firms I have were different. And also the trading view candles were different. So it's, sometimes you'll get slipped out, maybe due to prop firms, maybe due to just market conditions. But I literally noticed that my candles, because on the right here, there was a triple top or double top where that trade hit full TP. But on my FTMO, there was actually no triple top. Instead, price was trending down this way. So instead of having a triple top, I had like a higher high, and then I had a lower high and a lower high right there. So yeah, and I think you guys saw what I sent in the group this morning about Deal. Deal has suspended payments with prop firms. So right now for you guys, maybe getting paid using crypto. I don't like crypto ideally because if you get paid with crypto and then you sell that crypto and you, of course, fund your account or whatnot, when you're filing your taxes, they might count that as short-term gains or short-term capital gains, and the tax rate for short-term capital gains for crypto is off the roof. So that's why personally I don't like crypto. But yeah, also there's this, I think I've shown you guys, there's this other prop firm that I have. It's not mine, but that I've been using. It's a bit different from other prop firms. And this one has been around for like 10 years or so. Now, the only difference is called Fund Your FX. The difference with this and others is it has a 50-50 profit split. But what I liked about them is that trading with this kind of setup, which I think a good amount of prop firms may be forced to go for, because for example, one big issue right now is prop firms, like for example, the issue with MFF, it was found that, and we've always known this, they really don't give you 100K account. And I know one big issue with MFF is that they were putting the money within and not really using an external broker. But one thing I like about Fund Your FX, so for example, like the plan they have like a 15,000 account, 30,000, and maybe 45,000. So they have a 50-50 profit split with you. The only thing with them, so when I first started with them, they had a 10%, so they have no daily drawdown. So they had like a 10% overall drawdown. After a while, they changed that to 5% overall drawdown. But right now, they actually sent out an email like once this whole fiasco with MFF happened, they actually brought the 10% overall drawdown up or back. The other thing to watch out for with this one is, and which I liked about it too, because it helped me establish discipline as a trader, they have a max lot size limit. Anyway, let me just open that for you guys. They have a max lot size limit. I think they have a table right here. Yeah, so they have a max lot size limit. So I think, for example, right now, what am I? Level 3 or something? I'm either level 3 or level 4. So what that means is that for Forex pairs, you cannot go above like a certain. So for example, the one I'm in, I cannot have trading, or I cannot have open Forex trades that add up to anything more than, I think, like one lot or something. The other thing, you have to have a stop loss for level. Oh, they took off the stop loss for level 1. Why am I still using stop loss? Wait, I have the start. Yeah. Oh, okay. Interesting. I think they took that up. Yeah, you see, they brought back the 10%. So this is what I mean. This is better to explain to you guys. So previously, when I first started, and I started with them like a year ago or 6 months ago, this was 10%, but after a while, they brought it back to 5%. But now you can see they brought it back to 10%. So max time, 90 days. So with this 90 days, so what they normally tell you is that you need to achieve 10% within 90 days. But so long as you've achieved 5% within those 90 days, that's fine. So actually, there's no time limit. If you read there's an email they sent out, there's really no time limit. But if you've achieved 5% in those 90 days, they won't like block your account or anything. Because for me, there's a time, because I normally go like on a month-long vacation in December or January. So when I was trading with them, by the time I was going on my vacation in December, I was like at 6%. So I still had my account and actually got a payout, I think, in February. So that was my first level. The only other thing there's this max drawdown. Yeah, they haven't changed it. My bad. So they sent out an email. So this should be 10% max drawdown. I was looking at the target. So 10% max drawdown, you might want to confirm that with them, but they sent me an email and said that we are bringing back unlimited trading time and 10% max drawdown. Our profit share for the first 3 levels is 50-50. And then what they do, once you've achieved 10%, you get your payout. And they're pretty cheap. Like when I started with level 1 with the standard plan. This is only 300 euros, which is like it was like $380 by then. So for me right now with them, I'm already risk-free. So what happens once you achieve 10% profit target, you go to level 2. So they, is it double? It's not double. They like 1.5 or something your account. I don't know, whatever the math is. So they 1.5x your account. So the idea here is that as much, so you can even take two, even right now, because they don't have any time limit, you can take the whole year to get from level 1 to level 3. But then if you look at this, if you're consistent and find a strategy that's consistently profitable while maintaining the max drawdown of 10%. So they changed this to 10%. So ignore this 5, 5, and 7. So while maintaining the max drawdown of 10%, in like 5 or 6 years, you might be able to scale up to $1 million or 100K. So let's assume you even get to level 4, because I think that's my next level. I think that's my next level. So let's assume you get to level 4. Even though it takes you a year to achieve that 10% profit target, when you get paid, you'll get paid 70% of 100K. That is 70 grand. So using this prop firm allowed me to have that, what is it called? That marathon kind of, oh my bad, US 30 is pumping. My bad, guys. Using this prop firm allowed me to have that mentality that trading is a marathon, because if it can take me, if I can be consistently profitable and I'm taking the whole year to move from level 1 to move 2 levels up, then it would take me like maybe 4 years or 5 years to get to $1 million in funding. And with $1 million in funding and you have a profit, so keep in mind, if you've gotten to $1 million in funding, you literally just have to keep doing what you did to move from level 1 to level 2 to level 3 to level 4. Because literally, if anybody gets to level 6 and they blow their account, maybe a good amount is that maybe they just started over leveraging or stuff like that. But if you've slow by slow, it has taken you like 4 years, 5 years to get to level 6, and you get to $1 million. So I think for me, I'm aiming to get to the $1 million mark. I think I'm at 35,000 even, because I started with them September 2022. No, my bad. I think I'm about to finish level 2, so I'm headed to level 3 next year. My bad. I'm looking. Let me look at that account. I am at 24,850 bucks. So I need $150 more to achieve the 10% profit target, because 10%, because I started off at 22,500 and I needed to make 2,500 to meet the profit target. You know, I need to look up what I did with them, because this means I think I've met my, I don't know what I'm doing up here, but my starting balance was 22,500. I could have swore that. Wait. Then this might mean I have, anyway, my bad. I'll reach out to them. So think about this. So it's taken me literally a year to go from level 1 to level 3, assuming that. So my goal is that next year, by this time next year, I'm about to get to level 5. Because if I get this 35,000 and it's taking, because for me, I'm just taking this one slowly. The reason I was taking it easy is due to the stop loss rule, because they literally required you to have a stop loss. I think they're still editing this out, because they required you to have a stop loss through level 3. So the reason I was taking it slow is because I've been using a stop loss. So I've just been going for like small incremental gains. So my goal is to, by next year, a time like this, is to get to 500K. And so you can imagine, if I have a 500K account and I get to the 10% profit target, that's 50K. So 80% of 50K is what, 30K maybe, or 40K or whatever. So you can imagine the time you'll get to $1 million. No, it's not 50K. I normally tell you guys I'm terrible at math. Let me do that math right here. What is yeah, it's 50K, and then the 80% payout would be like 30K or 40K, whatever 80% of 50K is. It's actually 40K. So once you get to this $1 million account, you meet your 100K payout, you can get during the year an easy 70K. So this might be a nice prop firm for you guys to look into. I think a good amount of prop firms might go to this because for them, I mean, I don't know, of course, their background, but they tell you they fund you with real money. So to me, it actually makes sense if a prop firm is actually giving you 15K as opposed to telling you that they're giving you 100K. And previously you had to go or to do an interview with them, and then they had to assess your trading risk and your trading psychology. But nowadays they don't have the interview anymore. So Fund Your FX, it's a London-based UK prop firm, and I don't know, I saw it in a chat that was like because when prop firms were starting up, there was a lot of speculation. So I saw it in this discussion board, and this one person said, if you're skeptical, go for prop firms that have been there and fund you with real money, like Fund Your FX. So yeah, but if you're trading with them, just know that you need a stop loss at least for level 1. There's a max lot size volume, so you can't just be going heavy. So it's one of those things to just go slow with. Yeah, I don't know whether they say when they were started. Yeah, I don't know. Yeah, but it's definitely like 10. They've been in the game for like 10 years or something. All right, let me know if you guys have any last questions. US 30 hopefully pumps up straight to TP. If you didn't get stopped out of trade 1 like I did, hopefully you end the day with a 1.5% gain. And then I will talk to you guys tomorrow. Tomorrow is Wednesday. All right, any last questions?
Yeah, bro. Just one thing. With your SAR, have you added are you using another indicator, or just still you still learning?
No, I'm not using another indicator. I've started bringing in the reversal. So I've started using the reversal indicator, the SAR in the reversal indicator. So the SAR, whether it's in the reversal or high-low, is the same. But I've started using the reversal ideally because of how I use the reversal indicator to back test on the daily time frame. So right now I'm not using it with anything. But right now, my ideology right now is to, so for example, if I'm looking for buys, I want to see buys printing on the reversal indicator. So as much as I'm not using the reversal indicator, I want this buys to print, and I can use this as areas of support.
So you, basically, if it goes, if it aligns with the SAR, is that what you're trying to say? If it aligns, they both show the same signal.
Yeah, but it would
it
would have to be, so the only time I think I would trade both the reversal and the SAR, let me show you guys. I saw that on something. Was it gold? Is if the entry candle, what was it? No, not this. So let's assume I'll just, because there was definitely one, not this US 30, this one right here. So no, this was a sell SAR. Okay, let me just assume, I've seen it, maybe it was on the 1 hour or 4 hour or something. So you see this daily sell SAR, I'm sorry, this daily sell on the reversal indicator. So let's assume gold had created a sell this SAR down here. Let's assume it was created right here. So this is one instance that, oh, you know what? Never mind. It's here. It's here on the daily. No. This one. Yes. This one. No, but that's a sell one. Okay, never mind. Anyway, I've seen it somewhere. I think it's on the 1 hour, 4 hour. But anyway, so where was I? I was here. So let's assume there was a sell SAR on this daily candle, and then this daily candle closed below a sell SAR and fired a sell signal using the reversal indicator. So that's the only time, because I normally tell you guys, even though a daily candle closes above or below a sell SAR, like I'm not trading that candle. Like I'll fall back to the 4 hour and the 1 hour and look for entries right there, right? But the only exception to that is if the daily candle closes below or above the SCR that is about to be established, and then closes with like a buy or sell. So same thing here. Let's assume this sell SCR on EU appeared on this sell candle right here. So that's the only time I'll trade them. But right now it's more of visual for me. So, and I know we've been trading this choppiness this whole morning, and I didn't call any buy based off of the buy. But what I would be looking for here is I want to see this buys coming out of my 15-minute block that I'm trading. So it's more of a mental thing to tell me, hey, you're on the right side. And
Yeah, so
also,
not-
yeah.
Yeah, go on.
No, go ahead.
Yeah, so before before you had the SAR strategy, when you
Mhm.
were just trading the reversal on its own,
Mhm.
sometimes of course you could get baked out.
Mhm.
But with the SAR is more clear, isn't it? Like
Yes.
you just yeah. So yeah.
And the other part is like, and I was hoping this validated. The other part would be if you get, because I haven't traded the reversal in a minute, but another beauty would be, let's assume this 150 pip threshold was here, and this is just assuming. Let's assume 150 pip threshold was here, and let's assume we were looking for buys on gold, and then we had like 2 double SCRs right here. Now, this would be a lovely trade to take for a double buy rejection or a double SAR buy rejection. So you want you want all these confluences to align. Now, the only issue is that for you to be looking at all these indicators we have at once, sometimes you might miss the trade. Other times you might get analysis paralysis, because it would mean that every morning you're looking at what's going on with the reversal, what's going on with the breakout. Are there any double SARs? So I haven't taken a reversal trade in a minute. Not that, I mean, they've been there, but you have to invest a bunch of time for you to now incorporate the reversal indicator in there. So for me, since I really don't have to come, I don't have time. Well, I do, but I don't have time to come in here to the reversal indicator by itself and see, okay, has this met a threshold? So I just chose to incorporate or to use the reversal indicator in conjunction with the SAR strategy. Now, the only time, so sometimes what has been dropping? Gold. Yeah, so the only time I'll be on the lookout for the reversal indicator is if I see a heavy drop, which is why you guys saw this morning. I came to the reversal indicator and then I was looking for that threshold, but unfortunately the 150 pip threshold had not been met. So keep in mind, for the reversal, for me, how I notice a reversal, I'll see like a strong price movement to the upside or strong price movement to the downside. And then that will trigger me and tell me, oh, hey, if something has been trending to the downside, hey, go ahead and check the reversal indicator. But also remember that normally reversal entries happen like days before heavy news, and this makes sense because tomorrow is CPI, or days after heavy news. So, which is why I'm not too keen on looking for reversals on a daily basis.
Mm. Well, what about FX? Do you look at what do you think about
Which one?
FX Street?
What's that?
Not the website. Not the website.
Oh,
I'm sure you-
this one.
yeah.
Yeah, I don't look at it anymore. I know Audrey does. It's something I've been thinking of bringing on the live session, but I just don't want you guys to be looking into too many things. Because for me, honestly, like the SAR by itself is working perfectly for me. Yes, there are days that we've taken a loss, and Audrey told me, oh, hey, today a lot of people are trying to buy in the market, and I figured that. And also I found that I was one of the people that were trying to buy. The only other thing to this, that nothing is 100% right. So there's actually days when the retail traders are going to go or are going to move the market. So there can be a day here where 90% are shorting the market and the market is actually melting. But ideally what you'd want to see here is that if 70% and above are shorting the market, more than likely the market is going to go up, because the market makers are going to try and squeeze them out of it. Yeah, but I don't use this. So that's why you guys saw. So everything that I use in trading is on this screen. So previously I didn't have this one on here. So yeah, I might be looking at it often or a couple of times. There's actually another one. If you guys go to FX, let me show you guys. There's this one. This other one has the same thing, trader, I think it's called Trader Sentiment. FX Blue website has the same thing, but it has it for more instruments. So let me show you guys. And let's try and do some slight back testing with it. Trader Sentiment. So if you do FX Blue Trader Sentiment, market data, so you can see it has more instruments right here. So the ideology, but this one, yeah, it also has US 30. So you can see they're a bit close with the Dow Jones. 57% are long. So the idea here, so let's, for example, look at OddCAD. You see OddCAD. So previously what I used to do, I used to come in here and see, okay, OddCAD, 89% are trying to buy. So let's try and go to OddCAD and see what's happening in OddCAD. So you would be expecting OddCAD to, if 90% are trying to buy, I would be expecting OddCAD to be dumping. Look at that. I would be expecting, and this is the daily candle. Let's go to the 1 hour. You see, OddCAD has just been going down because, I mean, I'm not saying the reason it's going down is because 90% are trying to buy, but that's a big factor because if 90% of retail traders are trying to buy, how are the market makers going to make money? They're going to make money by stopping the 90% up. So in this instance, I would actually be looking for a sell on OddCAD if I was trading how I used to trade way back. So right here, for example, right here, what I would do on OddCAD, I would do that. I would say, okay, 90% are trying to buy, but I'm not just going to buy blindly. So I go down. What's the daily bias for OddCAD? Okay, the last closure for OddCAD for me was above this bullish SAR. So even for me right now, I would be with the retailers because my bias would be bullish. But if I was looking for a trade, let's say on the 1 hour, so let's go down to the 1 hour and 4 hour. So let's assume I'm not using daily bias for now. Let's see what zones I can find on the 4 hour sell zones. I can find on the 4 hour. So that's another thing you can use for your daily bias. So remember, you don't have to use my SAR for daily bias, but the key thing is you can always have a daily bias. So you can use retail sentiment as your daily bias. So you can be like, if 90% of people are trying to buy US 30, my daily bias is a sell. So you can use that as a daily bias. So if I was using OddCAD retail sentiment as a daily bias, I would come in here, draw my areas. So find at least double SARs and above. So this could have been a double SAR right there. This is another double SAR. Again, this is on the 4 hour right there. And you can see here, no, I thought that would have been actually this is a triple SAR. So this one right here, I can see a test and rejection. However, the entry candle was too far down. But this would have been a test of a double because this right here is 2 SARs. This would be a triple. But if you're doing the double, this candle tested. So this would be test and rejection. The sell entry would have been here. But anyway, that's the 4 hour. Then I would go down on the 1 hour. And this is assuming I am using retail sentiment as a confluence. You can see this. I think here we have a triple SAR. Here we have quintuple, so like 5. So this would have been break and continuation. So this would have been sell on OddCAD right here. So you can see, you can use it as a daily, but I don't use it anymore.
Yeah. So what was it? What were we saying? Yeah. So yesterday, the sell you took the SAR sell you took on gold.
Yes.
It was valid. It was valid, right? How many?
Yes.
What was your TP?
60 pips.
Yeah. So back in August, there was something similar like that, but in the sense that there was a reversal, and then they dropped it. They dropped it
Yeah.
for basically for 100 pips, and then they dropped it. It's the same scenario again. So it's like the same thing usually happens before heavy news, isn't it?
Before heavy news, yes, because they try and fake out both buy, both sells, yes.
Yeah. So what was it? Yeah. So based on like FXG and the website you just showed, when they release these forecasts, What does it essentially like show?
You say what does it what?
Like what does it essentially show?
Oh,
I
so
mean,
this one, for IG, so it means that the clients in the IG broker, 58% in this instance are short. So anybody of all the people who have broker accounts with IG.com, 58% of them are trying to short US30. So that's what it shows. I don't know what FX Blue, because I don't think FX Blue is a broker. So I don't know where the sentiment is based off of the number of real money accounts, not demo on FX Blue. So I think FX Blue is actually a broker. Okay, I didn't know that. So it shows so it ideally tells you, okay, our traders are 60% short on NAS, etc.
so was it? So for example, the daily buys on US30, is it bullish?
For me, since I'm using
Oh,
the SAR, is bullish, yes.
Yeah, it's bullish, and on gold it's bearish. But
Yeah.
on FX Street, the bias is bullish.
US30
Like
is pumping.
Yeah.
On FX Street, the bias is bullish, but who's bias, right? You should always ask yourself who's bias. It's the bias of retail traders. Do you want to trade with people who have never traded or who have like who just take signals blindly? Do you want to trade with people? Because that's what retail traders okay, let me not say retail trade because I'm a retail trader, but that's what most retail traders do. So this is the sentiment of even somebody who does not know how to trade and they just put money into the broker today. So would you rather use them yes, you can use them as a as a confluence or bias, but I would be doing opposite of what they're doing. If you told me today, all your entries need to be based off of trade sentiment. You cannot use your SARs. You cannot use anything. Honestly, I'll just be coming in here and then I'm like, okay, right now you can see gold. Gold is a perfect example. 80% are trying to buy gold. Look at what's happening to gold or what happened to gold. Gold has just been dumping. So you can imagine if you told me, Michael, you cannot use anything else but the retail sentiment to trade, I'll be like, perfect, don't worry about it. So I'll be coming in here, I wait for something to get to 80%. If people are buying, I look for sells. If people are selling, I look for buys. And you can literally make a ton of money doing that.
Oh, so this average forecast that they're showing, it's not like these guys that release this data, like what is it? I swear what are they? These people that release, they're not just retail traders, are they? Like the people that release these.
No, they're brokers. So think of it as so a broker is, for example, IC Markets, Hugo's Way. So think of it as if Hugo's Way were to come out, and these brokers actually sell that data to market makers or to institutions. Those brokers, so imagine, I don't know if you trade with a personal account. So for me, I have accounts with Hugo's Way, I have accounts with Liquid FX. So imagine if Hugo's Way had a platform like this and said, okay, it's like snitching on you. It's like saying, GA Trading Club right now is in a buy on US30. Right? And if the market makers know that, okay, let me not use that example because I don't want to say I'm trash. So let's assume this group of people are buying US30, and then the market makers know that these people are trash. You know what the market makers are going to do? They're going to enter the opposite. The opposite way. So it's similar to what was happening. You see this whole thing with my MFF. So there's a good amount of brokers have A book and B book traders. So what a good amount of them do, and which is what MFF was accused of, because one thing that MFF was telling people is that, oh, we only make money when you guys make money. So here's the thing. I'd mentioned the reason I only turn on the signal in the direction I'm trading, I know why I turned on the cells, is because I don't want to start seeing cells here because they can mess with my psychology. But that's just something I'd mentioned, forgot to mention. But anyway, so they normally have A book and B book. So one thing, yes, MFF, one way they were making money is by what? By challenge fees. The other way, A book traders, they see, okay, this trader has been consistent for 1 year. So we'll actually take a percentage of the trades he takes, or we'll take a similar lot size or even double the lot size that he takes, because we know that he's been getting payouts consistently for 2 years. But then there's this other, because remember, they have the data about, even right now in this buy for US30 that we are in, they have that data that we are buying. So what they do for the B book, so most of the other traders are B book, they're put in the B book. What that happens, for example, I think MFF had 350. Oh, this trade, you should be at break even. For both trades, you should be at break even. So hopefully you guys didn't get stopped out on the second one like me. So both of the trades have achieved a 1:1. So both of these trades should be, give me a second. Let me set break even on this last trade for me as well. So those trades should be at break even. Give me 1 second. Perfect. Move stop loss to break even. Okay, I'm at break even. Now, what a good amount used to do, and which is what MFF is accused of doing. Now, they had 350,000 traders, about 350, and allegedly. And again, this is public information out there that's based off of the documents that are out there on the case. So it's alleged that they had only about 100 or 150 traders in the A book. So meaning that they were only taking trades for about 100 traders. But keep in mind, they tell people that we make money only when you make money. Now, keep in mind, so you can ask what happens to the other 350K? Because even for me, if I think about it, there are people who get like 100K payouts, 20K or whatever. I don't think the challenge fees are enough to cover that. So another thing they're accused of doing is that they trade against you. So for the rest 349,000, or a good amount of traders that they know that these people have been failing challenges back to back, and I've been there, I've been that trader. So if that traders enter, if you know that 90% of traders fail, and you have a pool of 350,000 traders, and you know like 90% are bound to fail, what's one thing you can do? You can, for a good amount of them, if they enter buys, you go ahead and do what? You enter sells. Because a good amount of traders don't use stop loss. So, and I've been there when I was first starting to trade. I used to do like a demo, and I have a 200K demo, but because I don't care, it's not real money, the account goes down all the way to like 100K. So you can imagine if they were doing the opposite of that, is that if your max drawdown is 12%, so when you blow the account, for them, they're probably up 12% or even 24%, depending if they're 1xing or 10xing your trades. Does that make sense? So all of these people, prop firms, market makers, brokers, they have your data, and they can sell that data to institutions. So that is, so for me, I don't really like what like FX Blue and IG.com are doing right here, because ideally they're showing that they are broker, so which means they're people, because they've said right here, number of real money accounts, so not demo. So this means it's people with real money on their platform that are trading with real money. 89% of them are short in the market. So a smart institution right now would just be tanking OddCard, because they know they're coming for the stops of these people. But also, the other hand, a good amount of brokers, here's the other thing, a good amount of brokers don't also put trades in the live market. Now, you guys know about HFT trading, right? High frequency trading. Like we have prop firms out there that allow high frequency trading to pass your challenge, but they do not allow high frequency trading once you're live. And I actually have software that does HFT, but anyway, that's a topic for another day. So if they can allow you to pass a challenge using high frequency trading, why can't they allow you to pass or to trade with HFT on your live account? So ask yourself that, because if they're placing trades in the market, then they would make money from commissions and fees, right? Because that's the only way brokers make money. So why are they denying you the chance to use HFT? The reason is because they consider HFT cheating, but this is how HFT works. To use high frequency trading, you need a fast broker and you need a slow broker. And that is fine because that's how, that's how infrastructure is set up, which is why you see a lot of institutions fighting to be as close to the data center of London or New York as possible. So you see them paying millions of dollars in money to get access, proximity to the fiber optic cable that's coming from London or from Europe or from the Americas, because that data they get, just getting the quote 10 milliseconds before the next person, they're making a ton of money because they can front run that trade. So the reason a lot of brokers and prop firms deny HFT trading on live accounts is because that they don't put your money in the live market. It's ideally just a whole pool of money, like what MFF is alleged to have been doing, and which is why you guys should also be careful about brokers. They only put that money. My US 30 is about to hit full TP. They put that money only in one account, and then think of it as a Ponzi scheme. Like the whole Ponzi scheme that Bernie Madoff was doing. He wasn't investing clients' money. He was just putting it in a big account such that if anybody, and I know that 90% of people fail, so I know that 90% of people are eventually going to lose the money they give me. So a good amount of them, I'm not saying that's what they do, but a good amount of them, it's possible they just put the money you give them in a big account, and then that's what they use to process withdrawals. They don't really send your money to the live market. So because that's the only reason I can see them denying you to use HFT, because if it's my money, I should be able to use whatever software is out there. So why would you accuse me of cheating by using HFT? And I'm only taking advantage of you being a slow broker and you being a fast broker, because you as a broker, the only way you should be making money from me is using commissions and swaps. So if I'm making a lot of money, you should also be making a lot of money, but you're accusing me of cheating, ideally because the more money I make with HFT, I'm actually taking that money from your pocket. I'm not taking that money from the live market. I'm actually taking it from the broker's account. So that's a big reason why a bunch of brokers and even prop firms deny use of HFT, which is very sad, because that means that they're actually not putting the trades in the live market, which I've always known, but yeah.
So when you deposit money into your account of let's just say whether it's MFF or even your personal account, when you deposit that money, your money, so they take it and they put it into one big account. So then when you execute the trade, that money, what money do they put in them? So every single trader that has an account and that has money, they use that to put it into they use that to run your trade. Is that what you're saying?
Again, I'm not saying that that's what happened because I don't want to get in trouble, but allegedly, yes. Yeah,
Okay,
because if you think about it, if it's my money, why are you denying me the chance to make more money?
Yeah, exactly. So when you take the trade, how did they make money now? So how did MFF, like now you're saying allegedly, which is probably true, how were they making money?
So making money by they don't put the money in the live environment. They just put the money in one big account. If they know that 90% of people suck, then it means that 90% of people are going to lose the challenge fees. Also, if I know that 90% of people, like even knew that every trade that I take on the live session ends up, I have like a 90% losing rate or a 10% winning rate. Literally, you can just be coming to the live session. If I say buy US 30, you sell. Because 90% of the time, it would mean that you would make money. Like if you are smart, you would ideally be taking, so they're ideally using retail traders as an indicator. It's like, okay, if retail traders are buying, I'm going to sell. And they actually make money because a good amount of retail traders fail.
Okay, then that's bad. And then
it's bad. Yeah, I honestly don't blame them because there's crazier things that happen in life, but I think for prop firms, the conditions should be a bit more, even with the drawdown rule, 10%. If it's 10%, and here's the thing, they don't. If you think of 100K, you're actually getting funded at the very most 10K of live money.
Yeah,
So
yeah, that's
why
it.
not just give us a 10K account and that's it?
Yeah,
Right?
so
Yeah, like
so
why
what's
not
the
just
point of
give
calling?
traders a 10K account and then
Yeah.
do like do the same profit split or something and have like a 80% drawdown or something. They cannot
Yeah.
do that because they know that a bunch of traders are not good. So they would lose money that way. So the only way they can make money is by taking money out of people who are buying challenges, taking the opposite trades of what people are taking. Yeah.
So why did they call it 100K account? Like, what's the point calling 100K FPMO account, 100K MFF? What's the point if you're not giving the actual 100K? Is it just
Yeah,
the name? That's what
yeah,
people think.
it's just marketing, right? Because you're being if you guys look at what happens, like all the people who even make ads,
Yeah.
and I try to refrain from being such a content creator. They say, oh, you can get access to 100K. I mean, it's not 100K. It's really not. But it's just
Yeah.
marketing, and there has to be like a gap in the law or system to allow them to start to use those terminologies. So that's why you can see the governments are coming down heavy on them, because if you read that whole MyFF thing, they're accused of preying on people's hopes that I'm going to have 100K, I'm going to manage 100K, but it's not 100K. So
Okay, so that means they were basically lying. So they were basically, how is that allowed then? Why were they allowed to say stuff like that or to like advertise like that?
it's
Why
a
were they
crazy
allowed?
it's a crazy world, man. I've seen worse, right? I'm never surprised when financial scandals come out. Trust me, I'm pretty sure there's a bigger pyramid scheme than Bernie Madoff's out there. It's only because for him it got caught. If you really think about this, and like think about this, MFF has been around for 3 years. Like we thought this was the best profit. I mean, honestly, they did. Even myself got some nice payouts. They did help people, a lot of people, and I'll never blame MFF. I think what they did, it was good, because it's people who are coming out there. It's like, for me, I would go and then I would purchase the account. I think the issue I have with them is that they were taking payments during the last days, and I'm pretty sure they were aware of that. But for me, I can never go back and say, because I was seeing people saying MFF are scammers, and as much as some of the practices they were doing were not good, I mean, they were paying people out, because you have other you see like these prop firms that allow you to pass with HFT. These prop firms have issues paying people out, and I'm pretty sure you guys have been in groups where you find, oh, X prop firm is just denied me a payment. It's accusing me of copy trading. I've never copy traded, but MFF, I never heard people having issues with them. So to their benefit, I think they were actually doing well. But anyway, away from that, if you think of it this way, that MFF was around for 3 years and we were out here receiving payments, or people are out here receiving payments and people out here praising it, you can imagine there's other firms out there, doesn't have to be pro firm, that are still operating, and they've probably been hiding this for years and years. So it's all about, if you have good lawyers, especially in America, dude, you can get away with anything if you have good lawyers. So the best thing you can do, man, is just to take as much capital as you can from prop firms. Try to build up a nice payout or nice personal account, and then you just move from there. Anyway, I think this session has been like the longest. This trade for me is about to hit full TP. I don't know if you guys entered, but this should be a nice 1.5% gain. This one, as much as for me, I got slipped out based off of this markup. This trade did not hit stop loss or didn't get stopped out. So this should be a nice 1.5% gain for the day. Hopefully, if we don't get taken out at break even. But unless there's any other pressing questions, I will catch you guys tomorrow. I just realized it's like almost 12 p.m., man. That's crazy. Anyway, I will catch you guys tomorrow. See you guys. All right.